Hey, Chris Abate here with Confidence Financial Partners, and Dustin and I, we're just excited to be here today. We're with our buddy, our good friend Johan from ALLIANZ, and your title is?
Head ETF Market Strategist.
Man, that's a mouthful.
Yes, I know, it's a little long.
But one of the things that we love is we've collaborated with ALLIANZ ETFs, and that's the investment side, not the insurance side. But this is the buffered strategy that we use.
It's helped us for several years now. Clients who had what we call lazy money, sitting in the bank, sitting in cash, scared to get into the market. Johan and his team have really helped us help clients get into the market where they're tracking the S&P, but they know what the parameters are on the upside and the protection is on the downside. So it's helped a lot of our clients stay in the market.
Yeah, and so like, for instance, when there's a real volatile week, one of the things we like is markets down, you kind of just in the back of your mind, there's this psychology that says, I don't really need to worry about that because I've got the 10% or maybe a 15% buffer.
It gives you an opportunity as an investor to get immediate protection underneath of your assets that you've been saving and garnering over many, many years without giving you just low returns for eliminating the risk. You actually get to keep the opportunity.
And I love what you guys have done is you've also added an uncapped portion of this portfolio. So we're not hitting our heads on the ceiling of 15% or whatever that cap is. We've got the uncapped. So in a year when the market's really running, we're capturing almost all of those gains as well.
Yeah, that's right. And it actually happens much more frequently than you might think when you have those like big outsized years.
Yeah.
So half of the portfolio is in a capped product that will capture the moderate returns in moderate years. There are a few of those that happens all the time. But then when you have those real big spikes, especially if the market's been down a lot and it rallies back up 20, 30%, and that's how you can really start building wealth over time as well.
With this sense of, I'm not taking all the risk when the market's down.
Exactly. Yep.
A couple of the other huge benefits is that it's liquid. Because it's in an ETF wrapper, you've got high liquidity and it's also quite tax efficient. So not just IRA or Roth money, but non-qualified money as well can really be a nice feature as well.
Yeah,
absolutely.
So this is one of the reasons why this is one of our, a lot of times we use this as a core part of our overall portfolio, especially for people that are getting either close to that second half of life or in there and they don't want to take as much risk, but they want to enjoy the equity gains.
Yeah, that's exactly right. And let's face it, most of your clients are going to live for a while.
That's right. So, the time horizon is not just a year, it's much longer, sometimes decades.
Yeah, that's exactly right. Yeah, and the cool part too with the ETFs is that even though the outcome periods are either 6 months or 12 months, we manage that tax efficiently. So there's no end date on the ETF. So you and your clients can hold them in perpetuity without triggering taxable events unless you or the client decides that they need to liquidate or sell something.
Yeah, so we really enjoy this portfolio.
Thank you so much for your team and just all your collaboration.
You bet.
Appreciate it.
It's been my pleasure. I love it. Thank you.
All right, thanks.
Thank you.